All right. Yeah. Right now we are going to actually you and I, on one-on-one, we're going to look for these zones and find several examples of these zones of supply and demand zones, and let's see how we draw them on a live chart. Okay, how we find these zones, and let's see how we can, if we can qualify them to be good zones. Yeah, so from the previous video, I was cut. The screen record I'm using right now has a short period limit of 30 minutes, and my video, I didn't even realize my video went all the way to 30 minutes. All right, sorry about that, and but I hope this is really helping you guys, and I hope you find so much value in this. And if you do, kindly help your brother out, subscribe, hit the like button, and also leave a comment in the comment box. All right, tell me if you'd like to me to cover something else, and yeah, ask me any question about supply and demand, and I'll gladly answer. All right, so let's look at some of the examples. Right, so remember, what did we say? We said when looking for these areas, um, we look for aggressive buying, okay, or aggressive selling. Simply that's what these levels are, right? Aggressive buying and aggressive selling. So of course, um, something I didn't mention during the first presentation is that, so the ones that actually, the good part about supply and demand is it is happening on every time frame. All right, so you can use it on the daily time frame, on the weekly time frame, on the 4 hour, on 1 hour, even on 1 minute. You find these levels happening. Okay, so but what is important is to look for this level on the higher time frame, like the 4 hour daily, and trade them on the 1 hour and 30 minutes time frame. Okay, one thing, the higher time frame you go, the more time you take for this actually for price to come back to those levels, and the lower time frame you go, the faster price will come to those levels. All right, so depends on the type of the trader you are. If you're a scalper, you'd like to stick to those lower time frame. If you're a day trader, of course, also lower time frame as well. If you're a swing trader, better to you focus on even on the daily, 4 hourly, and everything, maybe the weekly. All right, so yeah, look for those levels, and yeah, so let's start. Right now I'm on USD ZAR, which is the South African rand, and let's try and look for these areas and see how we can trade them. Okay, so I personally actually did trade this one. Okay, so I have the level here. So first thing first, what do? You want to look for evidence of big candles. You want to see price leaving that level with what? Momentum candles. Okay, so look at this. So price was going up and down, of course, like that, moving up and down, making higher highs and higher lows. And then something price was dropping here, right? And then it moved up with some pressure, right? So what do? You draw. Remember, one of the methods is what? To draw the last bearish candle before the bullish move. That's when drawing demand zone. So right now we're looking to buy, therefore we draw what? The last bearish candle before the bullish move. So I'll get my triangle there. I'll try and cover this consolidation. Okay. So let me do this. Uh, let me just do this. Okay. I do this, and then I just do this. Okay, I just bring this to 0. Yeah, so I'll cover my consolidation. I want the 4 hour, by the way. I'll try and cover this and extend my level to the right side. Okay, and then I'll label this as my what? As my demand zone. Okay, this is my demand zone. All right, so let's see if it qualifies to be a good demand zone. Right. So what are the odd enhancers that we talked about in the first video? So the first one is, how did price leave the level? Okay, so can be very important for you to actually you can actually grade yourself in order to keep yourself accountable. So strength is what, I don't know if that's even necessary. I think since you've watched the video and I don't think it's good to do that, I can just maybe just talk about them. All right. So the strength. So how did price did this level? So we had 1, 2, 3, 4 candles, right? Nice three big candles, four big candles. So one strength is to give it a score of 2. How long did price stay at this level? It was, we had less than 3 candles, right? Less than this is like 1, 2, 3 candles. So it qualifies to be what, a strong zone. That's 4. That's a score of 4. And then how far did price move away from this zone? Okay, price went and came to this level. So price moved away from this level, I think, for some very very long time, and our goal is for it to give us a what, a risk to reward ratio of what, 1 to 3. So this is a 2 already. So we have that one ticked. And what's the other one? Do we have some demand zones below it? Other demand zones. Okay. Do we have? I think we do. Look, we had another demand zone just below it. Okay. We had a demand zone here, and we have another one right here. You see, we have a lot of demand zones here, and these are unfilled demand zones. So they carry the value. Okay, they have more importance. So we can trade them. So it has overlapping demand zone. Okay, so what do? We have that out of line. So is this a fresh zone? Has price come to this level again? Has it? No, it hasn't. This is the first time it's coming to this level. So what do? We wait for price to come back to this level. So meaning we have the score of 10 out of 10, meaning this is a high probability demand zone. Therefore, the likelihood of it working is high. So therefore, we can trade it when price comes to this level. Confirmation. What confirmation are we going to do for when price comes to this level? One, since this is a demand zone, we're looking for what? Bullish reversal patterns and candlesticks. So we're going to look for a hammer and a bullish engulfing pattern. We can also look for a morning star at this level. Okay. How about chart patterns? We're going to look for an inverse head and shoulder pattern and or a double bottom. So those are the confirmations we're going to wait for before taking any of this trade. So if we look, if we scroll to this side, we can see that price came to this level and respected that level. Look, price came to this level that we had drawn, respected it and went up, reaching our target. So if we were to take this trade, of course, what did we have? What confirmation did we have? We had this, not so much of a hammer. Then we had this nice bullish engulfing pattern. Okay, so it actually qualifies to be called the morning star. What is a morning star formed of? It's made up of a nice red candle, a doji candle, and what? A nice big engulfing pattern. Bullish candlesticks. Okay, so this qualifies to actually be what? To be called the morning star. Yeah, if we look again, maybe this can also qualify to be what? To be an inverse head and shoulder pattern, because we have the left shoulder here, and with the head here. So this also qualifies to be what? To be a nice head and shoulder pattern as well. So yeah, so if we were to take this trade, we're going to put our stop loss. So we can put up, if we entered here, right, on the candle open here, our stop loss could have easily been just be either, you can either choose, if you are conservative, yeah, and our target is going to be below, before that level right there. Okay, and easily this is a 4 to 1 easily. And if you wanted, you would have maybe just put the stop loss just below this level. Okay, below the target there. Or if you're very conservative, you can just let price be at that level. Remember, our aim is to have a risk reward ratio of 1 to 3 and above. Okay, so simply you'd have got this trade nicely, entering from the next candle open, which was here. After price gave us a what? A nice bullish engulfing pattern there. And this was going to be a very nice trade, catching about a 3 to almost like a just roughly a 4 to 1, which is a very, very good risk to reward ratio. Simple as that. Simple as that. It had a score of 10. It had nice overlapping demand zones below it. And we had some nice confirmation before entering the price. We didn't just enter blindly. Yeah, basically just like that. So it's as simple as that. Let's try and look for other one. For the other one, let's look at AUD USD. Let's try and look for AUD USD. Let's see what's happening. Remember, the goodness about this strategy is that it works on all time frames and it happens on all currency pairs. So there's no need of you restricting yourself to either one or the other. It works on any time frame, right? That's the beauty about it. Like you can go to any time frame, you can go to any chart, you're going to find this happening. So you don't have to restrict yourself to maybe just looking at one chart or looking at one currency pair. You can actually have a watch list that you can actually be looking at yourself. All right. So you don't have to restrict yourself to just having one. You can trade these from different time frames, and actually going to work just perfect. So hmm, what? So that's how it is. Like it's as simple as that. So let's look for the other scenario where we're going to have that same thing happening. I hope you're following. I mean, it doesn't have to be very difficult. It's simple. So let's look for, since we did a demand one, let's look for a supply zone. Okay, let's look for another example of a supply zone. Let's see. I see something here. So look. So what do you do? So look, price was climbing. Price was moving in a with big candles to the upside. Price was in a nice uptrend like that. And what happened? Okay, so price was moving in an uptrend, and yeah. So what did we have there? So let's see. Let's see. We actually have a lot of examples here. We can choose to maybe let's look at this one right here. So price was moving nicely that level there. So what do we do? Okay, we can come here and say the last we say remember the last bullish candle before the bearish move. So the last bullish candle is going to be this one here. And what do we do? We extend this to the what? To the right side. So you can either choose to cover the whole consolidation or cover the last bullish candle before price dropped. So my last bullish candle before the close was this one here, right? And price dropped. Okay, so easily you're going to have two trades right here. Simple. So this was a supply zone. So a nice supply zone. Okay, so price came to this level. So price came to this level, right? And then it dropped. And then it came again to this level, dropped. So easily you'd have caught this trade right now. Like this trade was very much tradable. Stop loss just below there. And yeah, if you enter this level, it's going to give you a nice trade. This is a 1 to 4.39. Nice trade right here. Simple. So let's see if it met our criteria. So how did price move away from this level? Strongly, right? You can see there were nice big candles here. Nice big candles right here. 1, 2, 3. Okay, that's one. 1, 2 nice candles. And then How long did price stay at this level? We have one, two, less than five, less than six candles to qualify it. And then how fresh is the zone? The zone is a fresh zone. Okay. Do we have overlapping demand supply? We don't have overlapping supply here, but clearly it worked still. So we had, and does it give us a risk to reward ratio of 1 to 3? Yes, it has. Look, the potential target was here and it gave us what? 1 to 4. Simple. So we'd have taken this trade. Remember, we say the more time price comes at that level, the more likely it's going to what? It's going to break. So similarly, we had an incidence here where we would have taken a trade if we wanted. Okay, we would have taken this trade again because this is the second time price was coming to this level. But according to this strategy, we just focus on what? On the first touch. This was going to be a very beautiful trade as well. Okay, price came to this level, giving us a 5 to 1. So you realize that when you're doing a back testing on this strategy, you realize that actually the price comes to this level more than sometimes price can come to this level 3 times, even 4 times. But the catch is that the more times it comes to this level, the less likely it's going to work. So you want to avoid this other time price is coming to this level. Focus on the first touch only. Once you do that, you're going to have high probability trades, unlike you trying to like catch the other ones. Okay, so let's look at another one, another supplies one. Are you seeing it right now? It's just right next to the other one. So what do? We had price coming to this level, right? In a nice move like that. And what do we do? Once price comes to this level, it drops, giving us two nice candlestick patterns. And what do? We draw it from the last what? Last bearish candle, last bullish candle before the bearish move. Okay, so sometimes you're going to find it this what we call a spring or a stop hand. You're going to like have this where price kind of goes up and then drops like crazy. So you can just cover that up. Okay, so price comes to this level nicely, and what does it do? It drops. So this is a supply zone, right? So price comes to this level and then it drops. And then after that, what happens? We wait for price to come back to this level again. All right. So our last bearish candle is this one here. So our last bullish candle, sorry, is this one here before the drop. It's this one here. So we want to cover that up like that. Then yeah, this is the supply zone like that. So after price dropped, you want price to come to that level again. You want price to really touch that level because it's a level where they have orders and price has to come to that level really for you to actually take the trade. And you wait for price to come to that level. And price dropped and then it came back to that level. And so what happened? What did we have? A nice pin bar formation there and then price dropped like crazy. So what you have to do done just here is enter on the next candle open here, stop loss just above that level there. And our target, remember, we're looking at the next what? So we can actually use the target to actually give us, we can actually look at levels, look to the left and see where price has previously reached. So we have aimed for this level here. And obviously, if we come to this level, it's going to give us maybe a 2 to 1. So if we entered right here and the stop loss just at least slightly above supply there, and if we held on to this trade, uh, if we held on, would have caught all this. This is a 3 to 1, nice trade, really nice trade, and yeah, it would have caught this trade nicely, giving us a what? A 4 to 1, and just after that, what happened? Price went crazy. So it's really important for you to identify your structures and always remember price, the market does not, things that don't just happen in the market. The market things don't just happen. There's always a reason why things happen. And you have to just look and react to the market. Don't try to fight the market. Just look at what's happening and follow the market. So, for example, if you ask yourself, what caused this market to go up like that? There was a level just behind here. Look, there was a level here, and this what obviously caused this price to go up like that. So Yeah, basically just look for these areas. Look for areas where the market gives you can't like, for example, the market is in an uptrend and then eventually it just drops. So like right now, you see that price actually came to this level, is coming this level with some momentum, and then eventually it dropped. What do? Look at the last bullish candle before the bearish move, and just like that, cover it and extend it to the right side. Okay, and always use your old enhancers. Those will help you to prevent you from actually uh, trading the trades with less probability of working out. Okay, so this is a nice trade. It's a fresh zone, doesn't been touched. Just sit there and just wait for price to come to that level. Price will usually come to that level. So you're now this is why the most important part is patience. You need to have patience. You need to have patience of waiting. You need to wait for price to come to that level. So yeah. And another thing, so this looked like a small, but this was a consolidation, of course. This also was a consolidation. So once price drops like that, also want to look for these phased consolidations after price drops. So if you look at this, if you go to the lower time frame, you realize that was actually a level. So always look for those levels and wait for price to come back to those levels. Yeah, wait for price to come back to those levels. Identify a level. So what I do, the best strategy to when doing this is once you identify a level, wait for price to come back to that level. Another thing you can do is if you're trading, for example, if you're trading with trading view, you have an opportunity to actually set alerts to these on these trades. Okay, you can set alerts and wait for price to come to that level. Once price comes to that level, what do? You'll be triggered and then you'll be notified, and then you can take that trade. You don't have to rush. So you can actually look at even 15 pairs, analyze them when you have time, analyze and set alerts. Just let them be. And then in a day we can have 2 to 3 alerts, and these alerts you're going to be sure that these are high probability alerts. Why? Because they're coming to your area. You're not chasing the market, you're letting the market come to you. And when you have setups like these are high probability setups. They are most likely going to work. Look what happened. So price dropped is what we call a drop base drop. Drop base drop. Our aim is to identify this base, right? So when I identify this base, what do we do? Look, we have another supply on top here, right? So supply with overlapping supply, like that. What do? We draw a level and extend to the right side and wait for price to come back to this level. Once price comes back to this level, what did you see? We had a nice what? Nice bearish engulfing pattern. We take our trade like that. We just put our stop loss below there and we hold. So our take profit. So we look to the left side. The most significant levels are somewhere here. So we had the level here, the level here. So we can actually aim at those levels. So if you were just patient, if you are patient and waited, you would have caught all this meat. You would have caught all this meat. Okay? So you would have caught all this. Of course, you'd have we're going to be worried when price had come again and so like that. But that's what price do. Always have to remember that price doesn't move in a straight line, and therefore you have to are supposed to be comfortable with actually letting the market do its own thing without interfering. So if you can do that, let the market analyze, let it just do its own thing. Let it do whatever it wants to do, where it wants to go up. If it wants to hit the stop loss, let it hit the stop loss. Okay. Don't mess with the chart. That's one thing that a lot of people actually struggle with, is not letting the market do its own things. And you realize that you'll be taken out, and then market starts to go in your favor, because what? Once price moved in your favor, what do? You move your stop loss like that, and price comes back that level, takes you out, and it continues to go in your favor, and that's the most painful part, because I mean, being taken out in a trade that you actually supposed to have won, it's bad. It's a bad feeling. Okay, so the best thing you can do for yourself is just analyze Set to take profit, set to stop loss, and move away from the chart. Let it do what it wants to do. All right. The reason why we're putting a stop loss is we've accepted the risks. Whatever happens, happens. Okay. So we don't have to like get involved with the charts and everything. So please, let's do this. Otherwise, I think this is so. That's all for now. I don't want to make this video even longer. So please, if you want me to go through other charts again, please feel free to comment in the comment section. Tell me if you want me to do more of this. Otherwise, thank you so much for watching. If you're not subscribed yet, please subscribe. I'll be dropping more of demand and supply zones analysis when I'm going to be doing this live. So please, if you have any questions on supply and demand, please feel free to drop them in the comment section. I will surely attend to them. Thank you so much for watching, and we'll be consistent with the videos. Please motivate us, give us some motivation, and please subscribe, like the video, and also comment in the comment section. Thank you so much. For me, bye bye until next time.